Are you tired of checking your investment account only to find nothing has changed for months? Imagine this. Every single Monday morning, you wake up to a fresh deposit in your account. Not just once a month or quarterly, as most investors settle for, but 52 times a year like clockwork. This isn't some get-rich-quick fantasy. It's exactly what my strategic dividend portfolio has been delivering for me. I still remember the day I received my first dividend paycheck on a random Tuesday when I wasn't expecting anything. That small deposit changed everything about how I viewed the market. Now, I'll show you how to build this same weekly cash flow system for yourself. In this video, I'll show how just 12 carefully selected dividend stocks can deliver income to your account every single week of the year. 52 payments annually, regardless of market conditions. Stay until the end for my number one pick, with a staggering 9.8% yield that could transform your investment strategy. Plus, I'll show you the exact calendar system that ensures you never go a week without fresh cash hitting your account. The final stock alone is worth your time. It's the cornerstone of my own portfolio for a reason most investors completely miss. Before revealing these 12 stocks, you need to understand why this strategy works so brilliantly when others fall short. Most dividend stocks pay quarterly, once every 3 months. Companies operate on different fiscal calendars, meaning their payout dates are scattered throughout the year. To create a portfolio that pays you weekly, you need to carefully select dividend stocks that pay across all 3 monthly cycles: January, April, July and October, February, May, August and November, March, June, September and December. Now let's break down these 12 dividend stocks that make this possible. I've personally vetted each one, not just for their yield, but for their business sustainability and commitment to shareholders. Remember, we're not gambling here. We're building a reliable income stream you can count on for years to come. Our foundation begins with what I call the Old Faithful of monthly dividends. Nicknamed the Monthly Dividend Company, Realty Income has increased its dividend an astonishing 118 times since going public in 1994. It currently offers a juicy 5.7% yield with an expense ratio of just 0.08%. What makes Realty Income exceptional isn't just its monthly payments, it's their portfolio of over 12,300 commercial properties across 84 industries, maintaining a remarkable 98.1% occupancy rate, even during economic downturns. Their triple net leases with stable companies like Walgreens and 7-Eleven practically guarantee consistent income. Let me put this in real numbers. A $10,000 investment in Realty Income generates approximately $570 in annual dividend. That's about $47.50 deposited into your account every single month. Our next pick adds powerful quarterly strength to our weekly payout machine. Verizon might be in your pocket right now, but it should also be in your portfolio. This telecommunications giant delivers an impressive 6.9% dividend yield with 17 consecutive years of dividend increases. Their modest 0.15% expense ratio means more money stays in your pocket. What I love about Verizon is their virtually unassailable market position. Their massive infrastructure investment and 5G leadership create insurmountable barriers for potential competitors. This translates to predictable cash flow that supports both increasing dividends and network expansion. A $10,000 investment in Verizon will generate approximately $690 in annual dividends, growing around 2% each year to help you outpace inflation while providing immediate income. Let's transition from telecommunications to a critical infrastructure play that's riding one of the biggest trends in modern commerce. I call Stag Industrial my e-commerce landlord. This monthly dividend payer offers an attractive 4.8% yield with a reasonable expense ratio of 0.32%. Unlike traditional REITs, Stag focuses exclusively on single-tenant industrial properties, the backbone of America's logistics and e-commerce revolution. With 569 buildings across 41 states, they're perfectly positioned to capitalize on the explosive growth in online shopping and the resulting demand for warehouse space. A $10,000 investment in STAG delivers approximately $480 in annual dividends. But here's what makes it special. They're experiencing 15% growth in warehouse space demand, with rent increases of 7 to 10% at lease renewals. This means your income and investment value could grow substantially over time. Next is what I consider dividend royalty. Johnson & Johnson has raised its dividend for an extraordinary 60 consecutive years, currently offering a 3.1% yield with a minimal expense ratio of 0.09%. Few companies on earth can match this level of reliability. After strategically spinning off their consumer health division, J&J now focuses on their highest margin businesses, pharmaceuticals, and medical devices. Over 75% of their sales come from products with one or two market positions. Their $15 billion annual R&D budget ensures they'll continue innovating for decades. A $10,000 investment initially brings in about $310 in annual dividends. But here's the magic. With their average dividend growth rate of 6.1% over the last decade, that same investment could generate over $550 annually within 10 years, without you adding another dime, all while owning one of the world's most stable and respected companies. Most people don't think of Microsoft as a dividend stock, but that's exactly why it's such a brilliant addition to our portfolio. It offers the perfect blend of growth and income with a 0.8% current yield, 12 consecutive years of dividend increases, and an incredibly efficient expense ratio of just 0.05%. Microsoft dominates in multiple high-growth sectors, leading cloud services with Azure, business software with Office 365, and expanding in gaming with Xbox. Their massive $104 billion cash reserve ensures dividend safety while providing flexibility for strategic acquisitions. A $10,000 investment yields about $80 in first-year dividends, modest compared to others on our list. However, Microsoft has grown its dividend at an impressive 10.4% annual rate over the past decade. Even more remarkably, the share price has appreciated an astounding 383% over the past 10 years. This makes Microsoft our perfect growth accelerator within our income-focused portfolio. This next pick might not be a household name, but it's likely produced materials in products all around you right now. LyondellBasell offers an exceptional 5.3% dividend yield, with 12 years of consistent increases and a reasonable 0.18% expense ratio. As one of the world's largest chemical companies, LyondellBasell enjoys significant economies of scale. They're also pioneering plastic recycling technology, positioning them perfectly for the sustainable materials revolution. While chemical markets can be cyclical, their diversified product portfolio provides remarkable dividend stability. A $10,000 investment generates approximately $530 in annual dividends, maintaining a 50% payout ratio through all market conditions. When other companies cut dividends during downturns, LyondellBasell keeps the cash flowing, while LyondellBasell dominates the global chemical market. Our next pick focuses on empowering America's small businesses, which are the engine of our economy. Main Street Capital is what I call my small business banker. This monthly dividend payer offers us 6.4% yield. Although its expense ratio of 0.38% is slightly higher than others on our list, but it's justified by its hands-on management approach. Unlike typical lenders, Main Street provides both loans and equity to smaller companies, allowing them to capture both interest income and growth potential. Their internal management structure eliminates the conflicts of interest plaguing many business development companies. A $10,000 investment delivers approximately $640 in annual dividends, paid in monthly installments. Their diverse portfolio of over 180 companies across multiple industries provides exceptional risk diversification. When I want exposure to America's entrepreneurial spirit with monthly income, Main Street is my go-to investment. In uncertain times, I always allocate part of my portfolio to what I call forever companies, and Coca-Cola defines this category. They offer a solid 3.2% yield with the remarkable distinction of raising their dividend for 61 consecutive years with a lean 0.11% expense ratio. Beyond their iconic beverages, Coca-Cola's unparalleled distribution system and marketing prowess provide enduring competitive advantages. They're strategically pivoting toward healthier options to adapt to changing consumer preferences while maintaining their pricing power. A $10,000 investment provides $320 in annual dividends. With their consistent 5 to 6% annual dividend growth, that income could potentially double within 12 to 15 years, demonstrating the incredible power of dividend growth compounding over time. Now, for what I consider the energy toll road of America, this midstream energy company offers a robust 7.6% dividend yield, one of the highest on our list, with 25 consecutive years of dividend increases and a reasonable 0.26% expense ratio. Enterprise Products. Partners operates over 50,000 miles of pipelines and processing facilities, critical infrastructure for transporting natural gas, oil, and refined products. What makes them exceptional for income investors is their fee-based contract structure, which insulates them from commodity price volatility. A $10,000 investment could generate approximately $760 in annual dividends, nearly 3 times the S&P 500's average yield. Their infrastructure assets last for decades, with minimal maintenance requirements ensuring steady cash flow to support consistent dividend growth for years to come. As we build toward our weekly income engine's completion, let's add what I call the digital landlord to our portfolio. This data center REIT provides a solid 3.7% yield with 18 consecutive years of dividend growth and an efficient 0.29% expense ratio. Digital Realty is perfectly positioned to capitalize on two unstoppable trends: artificial intelligence and cloud compute. They own over 300 data centers across 25 plus countries, serving 4,000 plus customers, including many of the world's leading technology companies. A $10,000 investment yields approximately $370 annually in dividends, with global data traffic projected to grow 35% annually through 2030. Digital Realty offers both reliable current income and exceptional long-term growth potential. Their assets become more valuable every year as our digital economy expands. Let's add crucial financial sector exposure to our next selection. Prudential provides a substantial 5.0% dividend yield, with 14 consecutive years of increases and a lean 0.17% expense ratio. Their diversified business model spanning insurance, investment management, and retirement services creates remarkable stability across economic cycles. A $10,000 investment delivers approximately $500 in annual dividends. Their disciplined capital management suggests continued dividend growth in the 5 to 7% range for years to come. When markets turn volatile, Prudential's steady dividend provides exactly the kind of reliability our weekly income strategy demands. We're now at the final piece of our weekly income puzzle, and I've saved the best for last. The AGNC Investment Corp is my favorite high-yield monthly dividend stock. It offers an exceptional 9.8% yield and a reasonable expense ratio of 0.75%. This mortgage REIT specializes in agency mortgage-backed securities that are guaranteed by U.S. government agencies, providing a unique blend of high yield with government backing. This structure allows them to pay out significantly higher dividends than most stocks on the market today. A $10,000 investment generates approximately $980 annually in dividends paid monthly. That's $81.67, hitting your account every single month like clockwork. Most investors would need nearly $30,000 in typical S&P 500 index funds to generate the same income. Now that we've covered all 12 stocks, let me show you exactly how they combine to create weekly income throughout the entire year. I've organized them by their payment schedules to show you which stock pays in which week. The portfolio is divided into two main categories. First, we have 4 monthly dividend payers, shown in purple on our chart. Then, we have 8 quarterly dividend payers organized in 3 different payment cycles. The blue group pays in January, April, July, and October, Verizon in week 1, and Johnson & Johnson in week 2, and Microsoft in week 3. The green group pays in February, May, August, and November, Coca-Cola in week 1, and Digital Realty Trust in week 2. And the orange group pays in March, June, September, and December. Enterprise Products Partners in week 1, and LyondellBasell Industries in week 2, and Prudential Financial in week 3. Looking at the 52-week calendar grid, you can see exactly how these payments are distributed throughout the year. Each colored rectangle represents a dividend payment scheduled for that specific week of the month. Notice that there is at least one payment every week. You never go more than 7 days without fresh cash flowing into your account. Do you want this complete weekly dividend calendar at your fingertips? Download the free PDF in the description and use it as your blueprint to build your own passive income machine today.